Hi everyone, this is Paul Lang from DTS, and I want to introduce you to what you're about to watch. This is an hour-long event that was presented live to the free members at Disciplined Trading Strategies. This event was called What Strategy Is That? And this is not going to be a detailed rundown of strategies that I know are used. I don't want to overpromise. Actually, it wouldn't matter because if I did that, it would not help to run down a quick parameters of some strategies without the underlying background knowledge, a bunch of words would not help you to make good trades. And that's actually what this presentation is more about. Name it or don't name it, understanding a chart is what makes you money. I think you'll enjoy this one. And if you do enjoy this, check out the many other educational events, articles, and Trade of the Week videos that you can get access to at the DTS Free Stuff page. Go to the home page, you'll find it pretty quickly. So for now, sit back and enjoy. Welcome to tonight's let's start over. Hi everybody, welcome to tonight. This is the DTS educational event, which typically has been the first Wednesday of the month. Usually I also throw in an extra impromptu event, so you usually get a couple of these every month, not to mention the bi-weekly scanning sessions on Monday and the educational emails. But this is kind of the premier event, goes an hour. This one is called, What Strategy Is That? It's Wednesday, September 10th, and we're all set. This is not, I want to read this, even though I don't normally read this slide because you get in your email. This is not going to be a detailed rundown of strategies that I know or use. I never want to overpromise, and actually it would not matter if I did do that because it would not be helpful to you without the background knowledge, a bunch of words that allegedly make a strategy is actually useless to anybody, and that is more in line with what the discussion is that we're going to have today. So that slide is important. It's kind of at the heart of what I want to talk about. What I was doing right when I kind of crashed there before we opened was I was collecting a bunch of these. If you just kind of, and I had a bunch, and that's what I was doing when I crashed. If you kind of Google new trading strategies for the new year or something, you'll get all of this garbage. I know we just blacked out. You'll get all this garbage, which is exactly what kind of drives me crazy. And some of the other titles were the 10 best trading strategies and a 30-minute strategy that'll make you money every day. And this is what I want to kind of address tonight because as I continue to work with people who just want to, kind of learn on their own, and as I work with my seminar people, I think this has become one of the most important topics in general about what is a strategy and how do you trade and what is the difference between that and reading a chart, so to speak. I want to just take a moment and use one for an example. The infamous Head and Shoulders, and infamous is the correct word in that case. You like that picture there? See Head and Shoulders, that's his head and shoulders there. So the infamous Head and Shoulders pattern. To know what a Head and Shoulders pattern is, we need to research that and I got the best definitions that I possibly could. Head and Shoulders pattern in technical analysis signifies a potential reversal from a bullish to a bearish trend. This formation is characterized by three peaks, a central peak, the head, with two flanking peaks, those are shoulders. As it develops, the stock pre-climbs the peak, drops back to its prior base, advances to the prior peak, then retreats once more, reaching the final peak. The initial shoulder level of the structure signals an upward trend might be ending. And here's a little summary. This is from Investopedia. Let's get a better definition from Charles Schwab, who was the top-ranking Google thing for this next to Investopedia. The left shoulder forms when investors push a stock higher temporarily. The head forms and declines to a point near the stock's previous low. The right shoulder forms once again fails to reach its prior high, then falls again. The fourth component, the neckline, is formed by drawing a line underneath the troughs established just before and just after the head. When the stock's price dips below this trend line, it is usually a strong indication that the pattern has broken or it may be time to sell the position. Now, what I want you to start thinking about as we look at some of this garbage, some of this stuff, is, the difference between sitting at a cocktail party and telling somebody how you short the Head and Shoulders pattern and say, okay, and boy, all this sounds pretty good, and then taking a trade and how you make money from this. I want to also point this out to you here that Charles Schwab goes on to give us something very important. I'm talking sarcastically in case you're confused. Confirming signals. Even when the stock price breaches the neckline, it doesn't necessarily mean it's a lock to continue in that direction. To help confirm the trend, two additional factors we're considering: volume. Number of shares trading is one indication. Classic Head and Shoulders, typically trading volume starts to lessen as the price moves higher, blah, blah, blah. This comment right here, and it says then, high volume and it breaks the neckline. This column right here is exactly backwards. This is exactly wrong. This is just an indication. Naturally, you probably expect the internet to be woefully incomplete, but on top of that, it's just wrong. This is not a use of volume at all. As a matter of fact, it is for the most part even backwards. And then the time frame, the uptrend heading into the pattern should be twice as long as the distance between the shoulders. Do you know how ridiculous that comment is? That the uptrend, the movement up, once the comment was that the uptrend heading into the pattern should be at least twice as long as the distance between the shoulders. So they're saying that this move up from here to here should be twice the distance of the shoulders from there to there. Can somebody tell me why that is like in the classification of just a moronic statement, an embarrassingly stupid statement for any person to say, let alone Charles Schwab? If this is the best they could do is hire some technical guy to give a characteristics of a head and shoulders, why is that so stupid? I like to prove things. It's not my opinion. Why is this so stupid? Yeah, exactly, Eric. You can't measure on a chart because if my chart is like this and your chart is like this, guess what? Twice that distance is a completely irrelevant, stupid notion. And this is how you're supposed to trade. You're supposed to make money from this. Can you believe this? That's how you're supposed to make money. So what's also helpful? Well, Charles Schwab gave us a diagram. Eric, I'm going to pick on you. Are there other seminar people here? Tag, you're here. I'm going to pick on you too, Tag. Yeah, well, so look at this. So here is a head and shoulders pattern. Again, I want you to understand that this is, well, you're new, Angela, so I can't really pick on you. I'm going to pick on some of the more veterans here. So this is a drawing of a head and shoulders pattern, all right? And this is their example of what to do. So there's your left shoulder, there's your head, there's your right shoulder, and then you're supposed to short beneath the neckline. Tag, Eric, any other seminar person. If you sent this to me and you shorted that, what would I tell you? Yeah, right? Exactly. Yeah, that is, yeah, thanks, Jorel. VRL is fairly new, but he's on top of things. Let me tell you, he's going through this class every day. That is not only a bad idea, that is not allowed, right? That is one. As a matter of fact, I have called this. If you have a wide pattern like this, I call that the second stupidest thing any trader could ever do, short of just fighting a trend. That shorting the break of anything after a huge drop like that is just completely wrong. And yet these are the type of patterns that are called strategies. And this is what I want to get to is the difference between, yes, I use the term strategy, don't get me wrong, because when you look at a chart and you understand it and you put some components together, it turns out to be a strategy, but it's a very precise concept when you're all done. And it's only actually one small part of the whole concept of taking a trade, believe it or not. It depends how you define strategy. One of the slides I had up, I took down, was discussing strategy versus the other terms. I figured this is a worthless, confusing thing. I don't care what you call things. I don't care what names you give to things. Here's what matters is where do you enter a trade? What's your stop? How do you make money? That's what matters. And how do you manage it? That's what matters. This is, I can't explain to you how insane this is. Now, here's the thing. If it's raining outside, you may see me with my umbrella walking to the train, right? But if I want it to rain, is it going to rain if I just take my umbrella to make it rain? They call this, what about in logic? I hated logic in school. It's modus tollens or something. It's a falsehood, right? In other words, when you find stocks that reverse, right? You find stocks that were in an uptrend, and then they fall, right? You can go back up here and say, oh, look what I found. I found a triple top high. I found the head and shoulders. I found this or that, right? But just because that head and shoulders forms doesn't mean it's going to drop. Does that make sense to everybody? The reverse logic? And this is the trick in technical analysis all the time. When charlatans are teaching you something, they find charts where this happened and say, look, this chart dropped and here's why, because this happened. But that's not how the world works, And what I'm going to show you is if you actually, and I encourage you to look at this for yourself, because I'm going to show you some charts. And naturally you could say, well, okay, Paul, you went and found those charts. Yeah, I did. But I challenge you to go find head and shoulders patterns that work. That they're practically non-existent. And here's the thing. Let's say you do find one that works. Could somebody please tell me, even if you're brand new to trading, if you're entering this neckline, where's your stop? Where's the only possible place you could put a stop? Anybody, even if you're brand new. There's the head and shoulders pattern would say your stop over the right shoulder. What else can you do? Do you know how crazy far that is? on any normal chart. And you're talking about a pattern that rarely is going to work. See, you want the opposite. You want to stop. You don't want a small stop, but you want a pattern that is precise so that relative to the possible move, it turns out being a small stop. And this is the reverse. This is a crazy wide stop on a pattern that rarely even works. So when you start hearing, about the 30-minute strategies and the strategies that, learn a strategy and here's a strategy for next year and here's this, all that is scam talk because when you learn how to read a chart, there is no new strategy to learn. Right, Eric? There's no new strategy. You learn how to read a chart. It's kind of like saying, I learned French. And somebody says to you, oh, you need to learn the new French for next year. What do you mean? What do you mean the new French? What are you talking about? All this is an opportunity to just kind of teach new things that don't work again. So you learn how to read a chart and then you put things together. And I'm going to go through more stuff here. I just want to emphasize so much how insane this stuff is. It's not explained. To the extent that it's explained, it leaves you with the crazy pattern behind. And even with this explanation, go try and find this on a chart. I did. I spent this afternoon doing that to some extent. And it's hard to find it, period. And when it doesn't work very good. So here's a head and shoulders pattern, right? Did I do that right? Oh, I skipped too many slides. Here's your head and shoulders pattern, right? Do you see it? Here I'll superimpose, right? Shoulder, head, shoulder, right? I think I did it right. Please, if I did it wrong, somebody let me know, because I'm as new to head and shoulders as any brand new trader in the room. But I believe that's a perfect example. And not only that, you ready for this, Eric? I followed their rule. The shoulder width is half of the run up. Isn't that good? That's going to make sure it works, right? Because that's really key to this strategy. And look what happens. Whoops. And look what happens. Whoops. Now, to be honest with you, I just wanted to follow the head and shoulders. I wasn't trying to find losing ones. I really wasn't. I was just looking for head and shoulders. I haven't found one that worked yet. I just tried to find 4 or 5 examples. So I'm sure you can find one that worked, but I'm just really objectively, honestly telling you, every one I found didn't work. And there's a good reason why. And now this chart here, I would not have gone long there. I would not have gone long there on the break of the head and shoulders. I would never have shorted that, of course, because you'd have to be insane to short this. I'm sorry, you just have to be insane because that's your stop. You have to drop to here to make one R. One risky. If you risk $500, so you have to have like a monument. You have to drop 3 weeks worth of trading, 5 days to get one R. You could never make money doing this. I mean, you'd have to be enough. Here's another example. Here's our head and shoulders. This is a little lopsided shoulder, but hey, they work better if the bear market starts the neckline. Yeah, that was tongue in cheek, right? A little joke there. If the whole market crashes as you break the neckline, yeah, then everything works. Yeah, it's kind of the umbrella thing I just said. So there we go again. There's your head and shoulders pattern broke, and oh, whoops, didn't really break. And the next one, this one maybe, this one here. You could have gone long on the alleged short using head and shoulders. I actually could have gone long here. Am I lying, Eric, or not? This isn't a perfect example of that, but you're actually kind of like sitting on a minor support area here. So this could have arguably been a long right when they tell you to go short. I wouldn't have done it. It's not honestly good enough, but gun to my head, I absolutely would have been long at the moment they tell you enter short on that one. Another one, head and shoulders, broke the neckline, and nope, sorry, not going to work. And please, for your own edification, go find them yourself. I'm not trying to sell you anything. I'm just trying to warn you. And guess what? These name patterns are all over the place, from flag patterns and ascending, descending, triangle, symmetrical, pennants, obtuse pennants, ridiculous pennants, Heimlich maneuvers, whatever you want. And they're all the same ridiculous stuff. And here's the problem. You're trying to take a handful of bars or a few little pivots and make a strategy out of it. Anybody, seminar or not, what is the problem with that? Because what are you excluding? When you're trying to say that that's a short, what are you excluding? Well, yeah, not just the higher time frame, but the 4 pertinent time frames, right? The higher time frames and maybe one below. In other words, everything surrounding you. Where it's the same thing I discussed when not too long ago, I did a thing on breakouts and discussing that whether it's ascending or descending, isosceles, whatever, is an extremely minor point compared to where it happens. It's the same thing with these. A true head and shoulders on what I would call a stage 3 is actually a long. It actually is a long, but it depends where it happens a lot. There's places I wouldn't go long, but you understand the point that doing this in a vacuum is just the biggest mistake you can make. There's no relevance, and the problem is anytime you utter words that go beyond, oh, here's a 10-minute strategy you can learn that's going to make you money. Whenever you go beyond that and say, oh, you got to learn more, well, most lazy people get turned off and they say, oh, well, this is too complicated. I'm not going to learn this. Just give me the simple, easy stuff. Well, like a lot of things, the simple, easy stuff just doesn't work. Technical analysis is not hard. It certainly is not hard. But I think anybody with common sense could appreciate that it's not this, and it's not any of these. Where are we going next? What strategy is that? Oh, no, I have a rant here on this last slide. Oh, yeah. Well, I'm glad I looked at my notes here. So basically, the concept of the head and shoulders, the thought process, as somebody would say, is that, and that's the way Schwab described it, is you have this run up on light volume. Well, I think they said the second one. By the way, volume is not relevant on this pattern at all. It's completely relevant. And then here's the point here, is that you make this higher high, and then you make a lower high, and therefore you're going to go lower because of this, because this higher high didn't follow through with another higher, is what their thinking is, right? But here's what I teach seminar students, right, is to ask, why did this make a higher high? Is it ever acceptable to have a strong stock, make a higher high, and then make a lower high? Is that ever acceptable? Or is that a guarantee it's going to go lower? Yeah. In a few seconds, can you give me an example of when that lower high would be acceptable? As a matter of fact, the time it's acceptable is exactly the time that Schwab said it's a good pattern. So they got it exactly wrong again. Exactly, Eric. Perfect. If you have an excessive run like this, boom, which is exactly what Schwab said you want, no, then this attempt to make a new high will often get sold because of all the profit taking in here. And then as long as you kind of hold, the key is that you kind of hold, you don't have to hold exactly. You can go a little below. It doesn't matter. Matter of fact, it's better if you go a little below. As long as you hold in here. And all this is just, whoops, okay, we're way too ahead of ourselves. You get selling, you come back, and you coagulate here a while, and then you go higher again. So without even understanding the concepts, and this is what I mean by reading a chart, when something happens, it's not okay to just say, oh, some generic thing told me a long time ago that this lower high means I short now. You have to ask why. Every chart is kind of like a fingerprint. I mean, every chart is a little different. No two charts are identical. And you have to be able to look at the chart and analyze what's going on. So even if you have your quote unquote strategy, my strategies I have that I use, there are things that I also then have to go and involve, all my other knowledge about what's going on to say, is this appropriate right now? Why did it pop? And then I wrote to myself, this is so aggravating because these strategies just suck people into just losing things because it ignores the most important things about technical analysis, which specifically is the price cycle, understanding where you are, how the 4 time frames interact. My definition of trading is understanding the battle between the bears and the bulls across the 4 pertinent time frames. And these patterns ignore all of that. Any one of these concepts that you look at in a little box like this could be exactly wrong depending upon where you put them on the chart. And there's a bazillion others. You want to have some fun, seriously, Google top new trading strategies. Google it. I mean, hopefully you'll get a good laugh. If you start clicking on stuff, I'm seriously worried about you. All right, so let's go to a real chart and talk about this for a minute. And maybe I can get a few good points across now that we have, kind of tried to dismantle the concept that a single thing like a head and shoulders is a silly idea. We're going to gap up to here. Got a concept in mind, anybody? Do you have a strategy to call it? You got any names that you want to call it? If so, and for everybody, let's go. Come on, I'm not talking to seminar people, I'm talking to anybody who's new, curious, wants to talk, and they start a conversation. Here's the stock gapping to here. Now, one thing you can do, you can look at this, like I do to many, many stocks every day and say, okay, I'm not really sure what's going on there. Just forget it. That's the advantage of stocks, remember, is that you can say, I don't know what's going on here and just go to the next chart. You can't do that if you're trading the market, but we're gapping to here. If you were going to do something, do you know a strategy, anybody? Can you name a strategy that would be apply here? If not, can you just describe what you would do? While you're thinking about it, let me give you the background of where I started getting onto this topic maybe 6 months ago or something. In the trading room at the end of the day, I present a little summary of the trades, and I give just a little 2 or 3 blurb thing about the strategy and the entry, which is really intended for seminar students. You wouldn't really understand it. And I came to realize at the end of the day sometimes I don't really have a name for what I did. I don't have a name for what I did. Is that bad? Anybody? Is that bad to take a trade and not have a name for it? No, it's not bad. It's bad to take a trade and not know what you did or not understand it or not have it in your plan. But sometimes it's just not a name. In other words, I could point to 4 things and say, okay, this is going higher, bam, over this. As a matter of fact, that's what I was doing when I crashed. I was going to put one other little chart in here from today, just to give you an example of that. But you don't have to necessarily even come up with a name for what you do. It doesn't matter. As long as you're structured, you know exactly what it is that you're looking at. To teach a lot of things, we put a lot of common concepts together, and we can call that a strategy, and that's great. But for when I teach a strategy, it's very, very detailed. So this is a gap up, and yeah, Eric is right. This is what I would kind of call a gap to target, and it has an extremely, right, Eric, an extremely exact way to trade it. Extremely exact. Here's what you can do at open, here's what you can do after open, possible long, possible short, the ways you would handle it. If I don't have a name for that, I also, yeah, it's a little wordy. If I don't have a name for that, if I just understand charts and understand what's happening, I could understand what to do. So with this particular gap, would you short this at open, anybody? Would you go long at open? Any comments on what to do with this? Notice you don't know what chart this is. This is from a couple days ago. Anybody comments on what you would do? Gapping to, you see the arrow, you're gapping to there. Is there anything you would do at open? Would you go long or short? Could you ever, let me ask this question first. Could you ever take a gapping stock and enter it the first 5 seconds of the day? Could you ever do that? Yeah, you sure can. Sure can. Yeah. Would this be one of those? The answer is no. This has a specific thing. This is what I'm trying to get to is the very, very specifics. Now, like I said in the opening slide, I'm not trying to teach you a strategy per se, because in order to understand the strategy, you have to understand everything that comes before it. You have to understand everything about a chart. I'm sorry, just the way it is. So this is what we call gapping to target. You're correct. And you have to know that that topping tail is going to form first. Now, I don't necessarily know that, but what I do know is I'm not going to short it until the buyers come in and say, uh-oh, there's nothing here. So that's exactly what I want to see. Now that's what it looked like. I don't think I want to show you that. Oops, I don't think I want to show you that yet, sorry. So we open, and you have to know it's going to pop. So if you shorted too early, you'd be out of this. Now, I don't remember when you're trading, you're talking about strategy. I don't know that's going to happen. But what I do know is I'm only going to short this after it pops. Does that make sense? In other words, that's the knowledge you have to gain. It's not about guessing necessarily what it's going to do, but you have to know to say, okay, maybe this is short, but I'm not going to short it if it just falls right there. I'm going to wait for the buyers to puke out of it and then look short. So this is a trade from yesterday. Was it yesterday? Yesterday, I think. This is tech. It wasn't the greatest entry I ever do, but for this setup, it's what I had to do. I had to wait for that. So it was short under 40.70. You can find the numbers on your own chart. Stop 41.51. And it just went into a free fall. Now, you don't always get this. It made 1.5 hour, what I call 1.5 times the day's goal, in 20 minutes or something. 20 minutes. Great. That was yesterday, not from 1987. That was yesterday. But the exactness of what to do, and this is what I'm trying to get across. Now, I had somebody, for an example, somebody's in the room a while ago, I didn't particularly like him. He was in there for a trial for a month, or he just about a month, and I think he hung around a while, but he was a little irritating because his strategy was gap and go. I said, well, okay, that's a name. Tell me what would you, because this he would call it gap and go. Well, okay, what does it involve? And he couldn't tell me. I said, so what it came down to eventually after an extended, I'm talking, but he's typing, so he has a disadvantage. After an extended conversation, it basically was, if a stock gaps up, you go long. That's the strategy. Oh, okay, boy, that's a simple strategy. I guess everybody can make money in the stock market. Can you tell if a stock is gapping up or down? Well, if it gaps up, you go long and you make money. Yeah, no. All these things have to be fairly precise, and it understands being able to look at this chart, first of all, and to say what's going on here, what's the bias, what do I need to see. What I'm going to get to in a minute is I want you to always think that rather than strategy being this perfectly boxed little thing, it's rather three things. Things happen in an area, and an area demands that you understand the price cycle, the chart, and what's going on, right? Once we're in that area, then we need some kind of event, something to say confirmation. In other words, the area, if you will, is kind of the scientific supposition, if you will, the hypothesis. And then we need something to happen to say, yeah, okay, in this case, I wanted to see the buyers take it higher, and then, that's it. Like a little kid throwing a ball in the air. That's all it has. And then the third thing we need is what? What's the third? We need to see some area, we need some kind of event, and then what's the third thing we need to see, everybody? The last thing before I enter a trade. And this is the way you should really think about everything. Rather than thinking about strategy, I don't know what the term strategy means. Yeah, you can use that term if you want, but it involves understanding the chart, where's the area, what's the event, and then what? The entry, right? And if you are here now, you won't need to look at the answer to the question of the week. Should every, and I don't know which way I phrased it, I flip back and forth in my head between making it a true or a false, but should it be that every strategy you have has one precise entry? Is that how you should do things? It makes no sense, but Eric, isn't that exactly what is taught basically throughout technical analysis land? I mean, in my limited view of looking at other stuff, I've never seen anything that wasn't a strategy with an exact entry, correct? But yet that is the dumbest thing you can do, right? Because as you know, we have various entries to help balance the confidence of our area and event, or setup, if you will, right? So all these things come together, and all three of these things involve a fair amount of knowledge. Now, if you want to take all these and call it something, that's fine. In gap class, we don't really use a lot of names, right? We use a rating. Now, this one happens to have a name because it falls outside of our normal rating system. Normally, we don't even give a name to any gap, right? Eric always call it VRL, we always call it tier 1, tier 2, whatever it is. And then for every rating, there's also a selection of entries. That's a good point. I didn't even think about that, right? Seminar students. Tier 1 gap has a variety of tier 1 type of entries. A tier 2 gap has a variety of type 2, tier 2 type of entries. And to think of the average normal just strategy being, oh, here, this does this, this, and you enter here. You could never make money doing that. It's so vague, so imprecise, so lacking of knowledge of all the important things. So anyways, moving on here. So 5-minute chart, blah, blah, blah. There we go. Now, what I said into the room, now normally I like getting my trading done in the morning, but once in a while I'll say, hey, need to come back this afternoon because blah, blah, blah. Well, I had a few things on my chart. This is yesterday, wasn't it? Oh yeah, it's a lot of stuff sells, yeah. You know what I've noticed too, Zone? I've noticed that a lot of people are really good at technical analysis after the end of the day, like when the chart's done. I've seen people just talk up a storm about what happened that day, even on the news sometimes. They're really smart. They go back and tell you why everything happened. It's great. So I said to the room, sorry, coming back this afternoon, going to see what's going on. Mostly I was looking to short the market yesterday afternoon. We did this slide, right? So here's, see, and like all I call it for the room people is tier 2 gap 1 minute DSS. That's just kind of a little, two words hit for what the strategy and entry was. So there's the numbers for that, and that was that trade. And then I said we can come back later. Here we go. So we come back later, and the market was not shortable yesterday afternoon. If you shorted the market, you made a mistake. I came back to short the market. I looked at things. You know what? Can't short this. It's not shortable. It was not possible because you're sitting on a minor support area. So no option to short it. But then I look at my screen and I see this. Does anybody have a name for this? How about now? Do we have a name for it? This is the same stock, by the way. A breakdown. That's a perfect name to name this because that is what the generic trading world would call this, a breakdown play. So anybody, especially if you're new and you're here listening, how do we enter that? This is the simplest thing in technical analysis. You could go Google it right now. How do you enter a breakdown play? A tired caterpillar, like a caterpillar tractor. How do you enter a breakdown play? Especially if you're not if you're a seminar, don't even answer because you're going to be forced to either give the right answer, which is going to mess up my presentation, or you're going to be forced to lie just to make me happy. How do you trade a breakdown play? If you're not sure, go Google it. Google will tell you in 2 seconds. You even ask AI. Ask AI, how do you trade a breakdown play? It looks like, is this a good breakdown? I'm not sure. Is this a good breakdown play, by the way? Oh, wait, Google said that? Google doesn't say that. Yeah, you didn't Google it. That's too smart of an answer. Well, here we go. Whoop, what happened? Darn it, stop doing that, Paul. What's the matter here? There we go. We're in, right? Look like a good breakdown, everybody? We're in. Oops. It came back and stopped out by a few cents. Assuming you're using the top of the base and you're using it to the penny, it stopped out by a few cents because you entered there. Now, what I love about some of this is that I'm not going back and making up stuff on a chart in past tense. I did this trade. I was in the room, except I didn't do that trade. And if somebody's in the room, I was typing at the time. Some people aren't there in the afternoon. When this broke down, I just said I'm waiting. I did not take the trade. I did not pretend I was going to take the trade. I waited. And waiting for one of two things. This is not the preferred thing to have happen, but this is something I felt was unavoidable to take. So I shorted there. There's the numbers. And this turned out to be the trade of the day. Kind of lucky, but I shorted there. Now, would you know to do that? If you read a breakdown play, or if that's all you know is what a breakdown play is, you have to understand that this is not a beautiful looking breakdown play. It could have dropped, and it did. It dropped like a rock. This is not, though, the setup where I would say, hey, you get under the base. Why? Well, because of this. Because I wanted to see the reaction when we went under the base. I got to see that. And that is the point of this, again, is that any reading of how to trade this chart, you would have stopped out. With superior knowledge of technical analysis, which is what you have to have, you would know on this one. Now, wait, now, do I get it right all the time? No, of course not. But I know the odds, and I know and had the patience to wait on this. And right, this happened yesterday. I did not short that breakdown. Was anybody trading this with me yesterday? Yes? No? Or did you at least see me typing? Even if you didn't take it, see me typing, waiting for this? I took one trade and I shorted it there. One trade there, that was it. So how do you know to do that? Well, you have to know. You have to know the charts. You have to understand what this was and what type of entry to use for that specific quality setup that you have. And that's where I'm talking about the concept of reading a chart and not getting hung up on names of strategies, because the name of the strategy here, the strategy that you would have done, would have stopped you out on this one. You have to have a better understanding of what's going on. Let me ask you if you have any questions. Because of the little mishap I had, this is the last slide. This was going to be the end of it, but I was going to put a closing slide in here. I wasn't able to do. That's what I was working on. Let me ask you a few more things, though, on this. I discuss this all the time. This is how you trade. I get these questions still that I'm really having a hard time understanding anymore. One of them is this insistence by people that they don't want to trade because of AI and because of the machines and because of the bots. Could somebody show me on this chart in the morning when I traded this or here, could somebody show me how whatever interfered with this trade? Could somebody tell me, explain to me how it is that machines, bots, AI made this chart hard to trade, not tradable, whatever it is? Can anybody explain that to me? I get more and more and more people saying this every day. And I think it's because more and more people are trying to trade, more and more people are losing, and they have to blame something. So they blame AI, bots, the machines, whatever you want to call it. I don't, I can't even begin to understand what people are saying. I just trade. You trade, you make money. Some days you get it wrong. That's just because you got it wrong. But if you said, see, and this is a great example of this because I could see somebody saying, I shorted that, and oh, AI, the machines got me. Nobody's getting you. Nobody's doing this to get your 100 shares. It's not happening. It just doesn't happen. And here's the big thing. Let me take the other side of it. Okay, it does happen. Guess what? What are your choices, everybody? Let me play devil's advocate. Yep, machines are coming in here and messing with you. AI is coming here and messing with you. What's the next statement out of my mouth? It's going to be a crude statement. Yeah, thank you, Vero. Exactly. Okay, machines, AI, whatever you want to call it, can make a mess. Well, there's two choices. If this is what happens all the time, and by the way, how did I know this is going to happen before it happened? Do I have a machine in my office? Do I have an AI? Do I have some bot in my office that I don't even know what that is, by the way, but do I have something that are told? No, it's because this is what happens on this pattern. On this pattern, this is what is most likely to happen. So you have two choices. You can be the idiot and complain that somebody ruined your trade for you, or you could understand with a chart. This is so great about charts. I don't care what happens. Here it is on a chart, right? It's Groundhog's Day. I keep saying, if this happens to you every day, if this happens to you every day, what grade of intelligence are you that you just keep doing this and stopping out, right? If that happens every day, you don't have to know. I don't care if this is just what traders did, if this is what the bots did, whatever that means. This, if you know the pattern, you know that this is what's likely going to happen. And then you wait for one of two things. And this was my second choice, but it was what I called an entry that you just can't pass up. Oh, it worked, by the way. And I actually just covered it right before the close, before that pop. So that was lucky. Yeah, that was, yeah. But this is an entry. And normally I'm not here doing this in the afternoon, but I said I was coming back this day. I wanted something short, and this is just on the screen. But there's a whole lot of reasons. There's no way I would have lost a full risk amount on that either. So that was why I did it that way. Do you understand, everybody? I wish I could just, put this little piece of my brain out there on the internet, and you could download it and just understand, because it's hard for people to breach this thing to get it, that whatever is happening out there is on a chart in front of you, the battle between the buyers and the sellers, but that includes all the buyers and all the sellers, whether it's you and me or the big boys or the bots or the AI or whatever it is. And you know what? I see these charts every day. Like always, the vast majority of charts you look at are not tradable, in my view. I know you can go back and tell me how you would have made money, but not in the moment, no. You just have to find those ones that are. And the ones that are usually the ones where you have a chart where it can't hide the fact it's being bought, or it can't hide the fact that it's being sold, or it's just kind of ping-ponging back and forth between some people who are ping-ponging it back and forth. And you jump in with a pattern. You don't try to fight the pattern. You're a quiet group today. Are there any questions? Because this is going to be a little short because of my mishap here. I also want to make a point, though, that when I talk about this, somebody in the room yesterday, right, this is a trade I did and posted it, and the room could play along, everyone wants to play along. This isn't just me looking at a chart and making up stuff, right? This is what I do. And I just have to keep emphasizing, it maybe sense my voice can be a little frustrated when I talk to new people, and I just keep hearing oh, I'll figure it out thing. And they are so far from figuring it out, The problem is that a lot of people like that are just never going to learn. I get frustrated because they're just never going to learn the right way. And everybody is hung up on these other concepts, just still thinking, oh, it's Tesla, oh, it's this stock. The other thing I was going to ask you was on another trade, but I didn't put it in here, is when I told you the name of stock, if that would have changed your mind about taking the trade, because for some people it would. Questions, anybody? You're a quiet group. I apologize for the mishap today. In case you logged in late, computer kind of crashed at 4:30. I didn't get going until 5:15, started at 5:30. I was basically done with the slides. Actually, it was about 4:15 I started to crash. I wanted to add a couple more things, but had to go with this. It's right here. It was 39.90 by 40.26. See it right here? Entries. And that is at. So it's under 39.91 was the call. Stop over 40.25. And then I walked away, came back, and started trailing it. I think I started trailing half, and then I said, forget, just trail the whole thing because it was, end of the day, free fall country. And, got lucky with the trail because that's the nice thing about shorting is that you don't often see this on a rally. You do sometimes, but I mean, much more often you see that on a fall. And it's hard to mess that up. It's hard to mismanage that because you're just dropping. Anytime you get a little pop, just let it happen, and then you reset a stop, and that's all I was doing. Questions, anybody? There was a summary slide. I didn't really finish it. You can get big fancy names to concepts that'll never work. You can also not have a name for a great setup, whatever you want to call it. All right, I'm gonna call it then tonight. I'm actually ending up a little disappointed because I really love this presentation tonight and started late. Ended up maybe missing a couple of slides. I might have put it in there at the last minute, but I think he gets the point across, very well. And the bottom line I really want to tell for anybody who is just out there kicking the tires, trying to learn this stuff, is just please don't lose money while you're learning. And please make up your mind to either really learn what you're doing or to not do it. Because this concept of just sticking your toe in the water and playing around with charts and stuff. People don't make money doing this, just goofing around. I mean, you do for a day, you get hooked on it. It's kind of like a drug, and then it, like a drug dealer ends up taking all your money because you get hooked on a couple winning trades, and then you keep doing it, but you're not sure what you're doing. So learn what you're doing somewhere, somehow. If you don't like it here, that's fine, but learn from somewhere. But set up some parameters, make sure you know what you're doing. Win small amounts to start, build a bank. Only trade from your winning bank. Don't lose money learning how to trade, okay? All right, everybody. We'll call it a night. Thanks. See you in the room. If you're in the trading room, nothing else going on this week. Saturday is the second course, Mastering Advanced Tactics for you seminar people. We'll see you then. Have a good night.